All right, Zach, we have a Social Security taxability worksheet that you and your team have created. It is unbelievable. We've had tens of thousands of people download it.
Which is crazy.
We had a huge video go, what I would say, viral at this point, where it pushed people to download that, and we have it. It's free. It's no cost. Use it. Take it. So this is really a tutorial on how to use this spreadsheet effectively for those who like to do things themselves.
Yep. Purpose of the spreadsheet is literally to tell you how much of your Social Security will show up on your tax return. That's it. Like, that's the primary purpose. Now, as you think about adding other income or strategies, whatever, we're going to show you how to do that in the spreadsheet. The idea is, if I add this, what does it do to my Social Security? That's the question this answers. It does not do a full tax filing. So we'll make sure we hit that in a second here. But how do you use it? So should I dive right into that?
Let's dive right into it.
Okay. Our Capita Blue is called Sky Blue. So you'll update the Sky Blue boxes only. So let's say that you have $40,000 of IRA withdrawals or pension or anything like that. And then tax-exempt income. So by the way, you're going to fill out these blue boxes on the left here, and that's pretty much all you have to do, and it will give you answers pretty quickly. But let's explain what this is. Tax-exempt income is income that comes typically from municipal bonds that folks who have a high tax bracket are investing in that way and want to avoid taxable income on it. It does not get excluded from the Social Security calculation. It doesn't show up as taxable income, but it shows up in affecting how much of your Social Security is taxed. I'm going to leave it blank. Don't run into it a crazy amount unless you have a lot of money outside of IRAs.
Another common question on that is, does Roth income go into this box?
No.
Roth does not show up anywhere on this worksheet.
Yeah, in fact, why don't we put something in there just to, because we do run into it. Let's say someone has $3,000 of tax-exempt income. They have a municipal bond fund for $100,000 or something like that. Okay. They have, let's do a single person, and let's say this person is greater than or equal to 65 years old. So it's 65 or older. And let's say this single person has a Social Security benefit of $3,000 a month, so $36,000 a year. Okay. Schedule 1, Part 2 is a part of the tax return. Schedule 1 used to be part of the 1040, and then Trump said, I'm going to make the 1040 a postcard size, and they didn't simplify it. They just took a bunch of things and put them on another page. and it's okay, because that page is typically associated with more complex tax returns. But the second half of that page allows you to adjust stuff off of your income. That's what Schedule 1 is. It's that page. Part 2 is the adjustments back off. And some of those adjustments are eligible to be put in this spot to help reduce how much of your Social Security. It's not super common. Almost never put anything in there, because for a retiree, it's just doesn't happen as much. Okay. So we have a single person. And so, Erik, we're not going to go through all the math, right? Like, we're just talking about how to use the tool.
Right.
Okay. So if you want to understand the math, there are other videos we've been on talking about this here on this channel. There are 2 calculations. They are shown below. So that's how you should understand how the sheet works, is they're shown below. And the lesser of those 2 calculations is how much of your Social Security you have to show. In this case, this single person has to show $27,450 worth of their Social Security. Their total Social Security was $36,000. So that is 76%. The orange color, we had a marketing team help us with that. That's called blood orange. So the orange color is 36,000 total, 27 is taxable, therefore 76% of it is taxable.
And that does not mean you're paying that dollar amount in taxes. It means that dollar amount shows up on the income that you have to report.
You got it. In fact, just to the right of that, it shows you your brackets based on the filing status that you pick in the original dropdown. It's showing you the 2025 brackets. And
that's a good point to make. This is for 2025. So do not use this for 2024 or 2026. Your team updates this. We will send updates. If you've downloaded any version of this, we send out updates.
Right. Pretty big email list for you, I think.
It is growing substantially.
Also, like, people are asking about, hey, that $2,000 charitable deduction, that's 2026. So again, to your point, 2025. Okay. So this is the bracket. So if 27,000 has to show up, then that's what gets pushed through these brackets, in addition to the other $40,000 of ordinary income that this person has. So as we think about this, we also get to reduce their income by a deduction. So we take the portion of Social Security that's taxable, the $27,450, and the $40,000 of regular income, so $67,000 and change, and then we get to reduce it by their deductions. So this person's deductions are if they take a standard deduction because of their age, they get $17,750 and the additional senior deduction, which was billed to us all as we're going to reduce the tax on Social Security.
Can eliminate the tax on Social Security.
Yeah, that's true. That's true. I was trying to be kind. But we're going to, so they're not. The Social Security tax calculation is still exactly the same. They just threw this additional senior deduction on.
Yeah.
And as far as we know, it's not something you can take earlier in the process, like back on box C7 where you're including like AGI, and that's actually something important. It says AGI not including Social Security. It's not technically your AGI because AGI happens later in the process. This is your income. This is your taxable like the ordinary income is the best way of putting it. But for whatever reason, when we use AGI, it helps people know like, oh, the stuff that would go towards AGI, I put it in here. Yeah. Okay. So you get that deduction and you have then now you hit your adjusted gross income. So we have somebody with $40,000 of regular income, $3,000 of tax-exempt income, and $36,000 of Social Security benefits. And that's a total of $79,000. And they only have to show $43,700 as AGI. Okay, so now if you're trying to understand the tax situation for this client, skip this incremental box that's busy. We'll come back to that. Go all the way over to the right, and you have our dark blue color, and then you have the sky blue color, and then the orange. So it's saying there's $79,000 of total income. Adjusted gross income is $67,450. Their standard deduction is $17,000. Their additional senior deduction is $6,000. Those things take the $67,000 down for this person to $43,000. Now that's the number that we finally are going to push through the 10% bracket and then the 12% tax bracket. This person pays $5,006 in taxes, and their effective rate is 6.3. So a single person, almost $80,000 of income, 6.3% tax rate on that $79,000 of income.
Yeah.
Pretty good.
Yeah, that's great.
Pretty good. Okay, so
there is a conditional formatting on the total income. I believe if you start to get towards IRMA limits, then that cell changes color.
I think you're right. Let's break it and see. So let's say this person had $200,000 of regular income. Yep, total income. So Erik can't see what we're looking at. Everybody else can. So you got this total income box changed from blue to orange. It's not telling you exactly what's going on, but it's kind of like the secret. It's like the animal style at In-N-Out Burger. Like this is secret. Like you'll now know if you've watched this that box changes when you're starting to creep into paying higher Part B and Part D premiums for Medicare insurance. Okay, so let's take this back and now let's show someone how to tinker with this a little bit more. So this chart in the middle, I'm actually going to reduce this just to be able to see more of it. Let's say this person only had $20,000 of other income instead of $40,000.
And this gets to where you can actually use this tool now, not just to see your Social Security taxability, but here's where it comes into other conversations like Roth conversions and how your decisions impact other things.
Exactly. Oh, and one thing I forgot is some people do itemize. It's less common because, especially for retirees, because oftentimes they don't have mortgage interest or taxes aren't as high for them, so they don't end up itemizing. But if you do, you can put that number in this box right here, and it will override the standard deduction for you and factor in your deductions. Okay, this table, there's something called the tax torpedo. What did you call it? Tornado?
You called it a tornado. I
did.
like that one. Yeah.
Anyway, okay, it's kind of like a tax tornado. Like you throw a little bit of income in and it grabs more Social Security and throws it into the mix and spins it around. So this table is meant to give you all the answers of how that happens and how much income comes based on the other income you add. And this box right here allows you to change the incremental increase per row. So if I do 2,000 here, it changes it to 4, 6, 8, 10. If I do 1,000 here, it just goes up by 1,000. Here's my suggestion. Change that number until this column, until you fill it up mostly blue, but you see some gray at the bottom. Make sure you can see.
Yeah.
The blue is the tax tornado, tax torpedo, Social Security tax torpedo, whatever you want to call it. That's what that is. What it's saying is for every dollar you're adding of regular income, it's increasing your Social Security tax, it's increasing how much of your Social Security shows up on your tax return. Once you get to the gray boxes, adding another dollar isn't affecting how much your Social Security is taxed. Okay, so let's go through an example. Adding $1,000 of Social Security changes, and this is all built on top of the base case. The left side is the base case. This box, you add $1,000, and it gives you a little clue here, right here, saying, hey, adding $1,000 actually added $1,900 in total. Because that $1,000, let's call it an extra withdrawal from your IRA or some other ordinary income, you worked part-time somewhere and you got something. That is causing $900 more of your Social Security to show up on your tax return. And this is really helpful when you think about Roth conversions, because as you think about this, like I'm thinking, I want to do a $10,000 Roth conversion. Okay, that's fine. And you think, because you're looking at the far right, you're thinking this person is in the 10% tax bracket, because they are. But you see their taxable income, remember, we removed it. We took it down to 20 instead of 40. So now we're looking at totally different numbers here. But their taxable income is $6,000. And the top of the 10% bracket is $12,000 almost. So this individual is thinking, I have room to do conversions at 10%. I could probably convert, what is that, $5,000 at 10%. If you do a conversion of $5,000, you will actually add $9,300. So you'll pay 10% on $5,000 and you'll pay 12% on $4,300 to convert just $5,000 of Roth money.
Yeah.
So that's painful. That's going to be like a 17 to 20% tax rate almost on the 5%. Like if you say, how much did it really cost me to move that $5,000 from traditional to Roth? It's not going to be 10 and it's not going to be 12. It's going to be high teens to low 20s based on my inability to do that much mental math that fast.
Yeah. Which still makes sense, might make sense for somebody. It's just make sure that you're pulling in this other income for doing that Roth conversion. Don't make this thinking what you had said, it's just $5,000. It's not.
Yeah.
It's more.
So if you said, I do want to use up that $5,000, then you look at the third row and it says, okay, converting $3,000 is going to end up using the 5.
Mm-hmm.
So you're going to pay about 10% on the $5,000. So you're going to pay $500 to convert $3,000, which is fine. It's just not 10%.
Yeah.
It's more, you know. You're looking at what, like 15 to 17 on that?
Yeah. So traditionally, where are some opportunities for Roth conversions? Is that the beginning of this gradient chart, or is it the end of that chart, or could it be anywhere in the middle of it?
Yeah, if you have somebody that like literally had no other income, there's quite a bit of space at the beginning where they can do conversions, and it's not adding much additional income, because they haven't even gotten through like the phase outs that are calculated in that. So if you're really, really low, sure, that's great. You can use it. If you are past the 85%, let's go back to that original example where this person has $40,000 of regular income. You know, once they add $4,000 of additional income, they are now having to include 85% of their Social Security, which is the max. They were at 76. So from 76 to 85, not that big of a change. Mm-hmm. So this person, especially if they have really big IRAs, they might say, this is worth it. Mm-hmm. I'm going to go through, I know the first $4,000 is going to be kind of expensive of conversions because I'm going to be pulling in additional income. Doing 4 pulls in $7,200. Mm-hmm. But from there on, every dollar I pull in only pulls in $1 of income.
Yeah.
So now I could convert $100,000 more, $200,000 more if they're comfortable with 12 and 22% tax brackets and any Medicare premium changes that might exist from that. Then that's a pretty good opportunity. It's just tricky, and this also can help you think about how you're going to file for Social Security. You might say, "Wow, I didn't realize that that's how it's going to affect my Social Security," and I get roughly an 8% increase for waiting to take Social Security. Maybe I can spend money from my after-tax accounts that I have saved up in regular brokerage accounts, delay taking Social Security, get the increase on Social Security of 8% per year. I'm not dealing with the tax torpedo. Adding Roth conversions has no effect on the taxation of my after-tax account. It does affect my Social Security. I'm delaying that, getting the increase, converting, taking after-tax money. I'm ending up with a better overall tax situation and higher Social Security payments later.
Yeah. Awesome. What about so we were putting off that middle column, kind of the bottom of the middle column.
So this is, sometimes people are thinking like, I don't want to have to like hunt and peck and figure out like, how much room do I really have? Knowing that, let's take this back so it makes more sense. So I'm going to put this at $20,000. How much room do I really have inside the 10% tax bracket? Like how much income can I add, even though I know that I'm going to end up pulling in some Social Security? So if there's $5,000 of room, I really don't have five. I have something smaller because the rest is going to be pulled, Social Security is going to be pulled in. And the answer in this case is $2,000. It's telling us to the 10% bracket, you have $2,000 of space. To the top of the 12% tax bracket, you have $22,000 of space. Top of 22 is 73. So in this case, if this person was trying to maximize the 22% tax bracket, maybe they believe governments are going to push rates up, that they think that's as good as they'll ever get is 22, and they'd like to take advantage of that. Well, you know that you can convert $73,000 and still stay in the 22% tax bracket. My thought on that. So let's see what that looks like. I'm going to take this to $10,000 a line for this right side because we're going to get close to this 70. And I just want to get a rough idea for like, if I was going to do a $70,000 Roth conversion, what does that do? And it's going to, I gotta zoom in a little, adding 70 actually adds 93,000 of income because of the Social Security pulled in.
Yeah.
So
that 93 number is what we should be considering in that room to the top bracket?
Kind of. I mean, that's the real room.
Yeah.
But the tool is telling you you're going to use all the real room by adding 73 of what you think is good. You know what I mean? What you think is income, let's call it like hidden income is coming in to fill up the rest. You really do have 93,000 of space. Roughly, it's a little more than that, like $95,000 of space.
Yeah.
But you can't if you do 95, you're going to go past it, is what it's saying. You can only do 73.
I think the only other thing here is just to make sure, and you showed it at the beginning, your age and your filing status impacts this. So make sure you're getting that right. And there are options for single, married, filing joint, filing individually. There's a lot of different options for people.
Yeah, and we are, it's a good point. So this is really important because it affects the standard deduction that we're throwing in there. It affects your senior deduction. It also affects the additional standard deduction. So there's the standard deduction, the additional standard deduction for seniors, and then there's the senior deduction. They're all three different things. And depending on your age and filing status, the standard deduction stays the same, but the additional senior deduction changes based on age. And then like
bonus.
The bonus, that's a good word. Yeah, that is the real word, right? The bonus senior deduction is the third one. So all of that's based on your filing status. And then it's important to understand that we've thrown all three of those in our calculation right after adjusted gross income. Technically, there's a chance that bonus senior deduction happens right before adjusted gross income. I believe it. I'm like really confident. We'll see if I eat my words on this, that it's going to happen after the Social Security calculation. I don't know because it goes total income, and part of that is how much of your Social Security shows up. And then it goes adjusted gross income. I don't know if the additional bonus senior deduction is going to happen right before AGI or right after AGI as part of the normal deductions. Either way, I don't think it's going to impact the amount of Social Security that is included.
Yeah, perfect.
Okay, so what does this tool not do? It's not going to calculate alternative minimum tax. It's not going to calculate how a business, S corps, LLCs, other partnerships play into this. It's not going to calculate qualified dividends and long-term capital gain rates. Like we're not doing that. And I got a lot of comments on that, and we don't want to. And I hope that's okay, but we don't want to because we actually have much more robust software where we can actually analyze all aspects of the return, all the schedules, the A, the B, the C, the D, and E, those are specially, and then Schedule 1 and 2, and then the 1040, like all of that in a playground where we can mock up different scenarios, model out future scenarios, multiple years at once. Yeah. This thing is very simple. Well, it's not super simple in the back end, but it's meant to be simple on the front end to tell you one thing, which is how much of your Social Security is showing up, and if you add other things, how much more of your Social Security is going to show up.
Yeah. No, I think this is a fantastic cool tool. Again, it doesn't cost you anything. We don't market to you. Once you download it, if you want it, you get it. I'm not sending you drip campaigns or marketing or emails or anything like that. So just get it, play with it. If you want more help and more details, first option, you can reach out to Capita and the people who built it and know what's going on, you can reach out to them. Second option, ZACC'S channel also has more information on this and the strategies around Roth conversions and whether or not to do Roth or traditional. So make sure that you go subscribe to ZACC'S channel as well to get even deeper dive into all
Retirement Nerds was taken, so we went ZACC Call Money Education because we're that creative. Anyway, so that's the best way to find that. We're going to have a whole season on Social Security, like not just the taxation of it, but the filing strategies, the break-even points, the spousal and survivor strategies, and all of that together. I think I'll have Tyler help us with that one.
That's awesome.
Bonus word?
Ooh, are you challenging me now?
I know. I was just wondering if I need to come up with it.
You got it. Yeah, you got this.
I was either thinking we didn't go into the calculation with this. A key number that is in the other episode where you and I talk about how Social Security is actually calculated is something called provisional income. It's used here and only here, and then it's forgotten. Provisional income in this case is half of the Social Security plus a bunch of other things. So if you've made it this far, throw in the word provisional. Bonus points if you can use it in a sentence unrelated to this. And then also, hopefully that whets the appetite to think about, like, I really should go listen to that other one on your channel around how does Social Security actually get calculated. Yeah,
and I say this if this is your first video you've seen on our channel, we do this because we get a lot of comments at this point, and some of them aren't the nicest or they haven't watched the full video, and so they're missing context. And so it helps us filter through the comments at the end of, okay, if they've used that keyword, they've watched the video, we can help in a different way through that.
You know, Eric, I actually love I get a lot of kick out of the comments like, oh, his hands are so small. His head is so big. What prescription of glasses does he have? Like,
provisional income.
All that. Right, exactly. But I actually don't mind those. I'm like laughing. It's like popcorn moment for me just to sit back and enjoy. And then when somebody gets in there and they're like, did the math wrong on the Roth conversion calculation, I'll be like, oh, I'll tell you who did it wrong. Get all angry. Yeah. So it's weird the things that bother you versus the ones that don't.
That's usually what it is. Like, oh, you didn't talk about this, this, and this. And it's like, oh, we did. You just didn't watch the full video.
Make it to the end.
So that's yeah. Well, again, thanks for doing this. I think this is going to be super helpful for those who downloaded this or who will download this. So thanks for your time, Zach.
Of course. Thanks, Eric.